commodity front, right? We're seeing gold, silver prices, which are at highs. Now, silver prices have gained 40% so far in 2025, outperforming recent highs. Jonathan Barratt, CIO at ETO Markets, tells my colleague Manisha that silver prices will soon touch 2011 high of $49, per ounce that we were seeing that time. Listen in to that conversation.
Yes, absolutely, even more so, a lot quicker actually. I think when you look at that $50, I think the market's got that in its sights. There is no real reason as to why it can't get there. I mean, silver has two roles, as we know. Silver is a store of value, similar to gold, but it's also got an industrial use. And I think when you look at where that industrial use is placed, and China is obviously the main buyer, that particularly for its solar panels, I get a sense that we haven't got the right amount of supply to meet that current demand. And if China's saying March on solar is where it has to be, and then that requires that demand for silver, then I think you'll see that $50 breached this side of Christmas rather than further out. So I'm sort of remain quite bullish on silver.
And, a lot of people, of course, are holding into gold and silver. But, Jonathan, if somebody wanted to buy it fresh, do you think this is the right time as well?
Yes, I do. I think when particularly on silver, when we broke through 39.50, that was a key technical point for us. Then, you've got to ask yourself, when do I get in the silver market? Have I missed the boat? And I think the key is that if you do want to get into silver, then just take a small amount at these levels, and when that gets in profit, start to trade up into the position. So it's always hard when you're on these record highs, when to buy, and have you missed the boat? But if you take 100% of your normal position, just take on 10 to 15% to start, make sure that's in profit, and then average up into the trade as it goes higher.
Interesting, as you say, Jonathan, that gold, of course, seems to be gaining, but that would be, of course, because of dollar index decline. Silver, of course, is a different story altogether. Deficit market, strong industrial demands, value, and then we're also looking at very strong investment demand coming in for this one as well, from retail, on ETFs, and etc. So if you really had to divide a portfolio between gold and silver, how would that ratio look like for you?
Firmly weighted with silver. And I think in my mind, when you look at it, gold will always be that store of value, but it has reached record highs. Silver hasn't, so you've got to be weighted towards silver in that ratio.
Are you going to make it 30-70, 60-40, 80-20?
No. I think you can be a 60-40 on that. But once again, it's all about how you average up in your position. If silver starts to move, which is a lot more volatile than gold, the tendency will be to average higher, which will then push your weighting towards silver over gold, because gold hasn't yet reached those record highs, but there's more volatility in silver. So your return will be higher in silver than it would be gold to start with.
How are you also looking at the tariff situation? Because the markets do believe that it would perhaps take a couple of months, if more, for the situation to settle down.
I'm nervous, to tell you the truth. I'm nervous as to what can actually occur, because if the tariffs are voted as being void, then the tariffs that have been collected could have a problem with the US Treasury, because that's about $159 billion that has been collected. They'll have to pay it back, and I think that will be a major concern. I think that it's an issue that, well, hopefully we'll get some read on sooner rather than later. But I think it's something that'll go on for some time, and hopefully that'll quieten the volatility. But as we've got uncertainty out there at the moment because of the tariffs and whether or not they will be void or not, it's been a complete mess. And if it's a complete mess, the market's not going to like it. So I'm hoping that time will actually add as a bit of a panacea to calming the market down.
Jonathan, what is your sense also on the metal prices? Because we've seen some support come in for copper, also for the ferrous metals. Steel and iron ore seem to be doing well. That is, this is after China has put a kind of a cap on steel production there. But when you look at the latest Chinese data, that hasn't been any support.
Correct. I mean, when you look at the latest, the NBS data that came out, we're not in growth phase. We're still in contraction phase. That is a worry. I think we always look for more stimulus. From the PBOC. So I get a sense that that we're not going to get it. But remember, as we know with copper, we've had quite a huge sell-off. It makes sense for it to recoil some of that. Let's see how the bounce occurs and whether or not the economics behind it will support it. I think China continues to be in that growth phase, and as correctly pointed out with iron ore, etc., we are getting a little bit of support at the moment. That could be just dollar-related weakness, but I would like to think that China has capacity to stimulate the economy, and she'll continue to do that, and that should underpin any price decline.
What are you most bullish on when it comes to overall metals within ferrous and non-ferrous, both the segments?
Oh, it has to be silver, I'm afraid. But I think silver's something I've been passionate about for most of the year, and I'm waiting for it to hit the record highs.